Hello everyone, and welcome to this week's market review. Over the past week, global financial markets continued to show a high-level consolidation trend amid the interplay of multiple factors. Macroeconomic policy expectations, geopolitical developments, and the release of key economic data collectively shaped market movements. Capital has become more cautious amid uncertainty, and the market has exhibited a clear pattern of wait-and-see and strategic positioning. Let's first look at the macro landscape. Last week, the core market narrative continued to revolve around the policy paths of major central banks. Although some inflation indicators have eased compared to earlier levels, core inflation remains relatively sticky, leading to ongoing adjustments in market expectations regarding the timing and pace of rate cuts. At the same time, several central bank officials emphasized a data-dependent approach, indicating that future decisions will be highly reliant on economic data performance. This stance has, to some extent, reinforced market uncertainty and prompted capital to lean more toward defensive positioning in the short term. It is evident that the lugatar shifts in interest rate expectations are becoming one of the key drivers of current market volatility. Next, let's turn to the precious metals market. Last week, gold maintained a high-level consolidation trend. Supported by geopolitical risks and macroeconomic uncertainty, gold's safe haven appeal continued to play a significant role. Although gold experienced technical pullbacks during certain trading sessions, the overall downside was limited, indicating strong underlying support. From a capital flow perspective, institutional investors still tend to view gold as an important tool for hedging risk. In the short term, before policy paths become clearer, gold may continue to maintain a range-bound but relatively strong pattern. Now let's look at the oil market. Last week, international oil prices showed clear range-bound fluctuations. On one hand, supply-side uncertainties, including potential geopolitical disruptions and expectations of production adjustments, provided support for oil prices. On the other hand, concerns about global economic growth and energy demand limited the upside. The interplay of bullish and bearish factors has led to repeated tug-of-war around key price levels. Overall, the oil market remains in a phase of expectation-driven positioning, with no clear directional trend yet. In the equity market, a clear structural divergence was observed. Major global indices remained at elevated levels overall, but sector rotation accelerated. Some previously strong-performing technology and growth sectors experienced pullbacks due to valuation pressure and interest rate expectations, while energy, financials, and defensive sectors showed relatively stable performance. This reflects a shift in market capital from concentrated bets toward more balanced and diversified allocation strategies to cope with potential volatility risks. In the foreign exchange market, the US dollar index remained in a consolidation phase. Affected by fluctuating interest rate expectations, the dollar lacks a clear short-term direction. Meanwhile, non-dollar currencies showed divergence. Currencies supported by stronger domestic economic data remained relatively firm, while those with weaker fundamentals or under policy pressure saw varying degrees of decline. Overall, the forex market is also in a waiting phase, looking for further confirmation signals. Finally, let's summarize. The two key themes of last week's market can be summarized as high-level consolidation and expectation-driven positioning. With macro policy paths still unclear and key data continuously being released, the market may maintain its cautious tone in the short term. At the same time, as a new round of economic data and policy signals emerges, market volatility may further increase. For investors, in the current environment, it is even more important to focus on risk management and position control, while staying sensitive to changes in key variables. That concludes this week's in-depth market review. Thank you for watching, and we'll see you next time.